So how could we conduct missions in our church in a way that doesn't expose our church campus to the loss of equity? And Monica, what's your experience been so far with the single-member limited liability companies?
We've had several of our 501c3s set up single-member LLCs, and part of the purpose of this is twofold. Because it's a separate legal entity, there are some benefits available. For example, if your church has a food bank or does a lot of benevolence activity, there is a way that you can set up an LLC and participate in the state working poor tax credit. As a church, you cannot do this because the rule is that 50% of your budget has to go to helping the working poor. Well, there's no church who spends 50% of their budget. But when that activity is transferred to a single member LLC, in other words, the church is the member of the LLC, then that entity, that new entity, helping the poor, LLC, becomes eligible for the state tax credits. That's the credit that you give. People can give up to $400 for a married couple and get it directly back from the state. So there are certain activities that you can do within a single member LLC that'll provide you with benefits. And of course, there is also the legal issues associated with having risky activities in the LLC, but Bob will address that. So we've also had several entities, for example, if they have a school, there are certain things that are available to a school that are not available to a church. So we have been able to set up LLCs as a school and then partake in some of the things like software, and there are certain benefits that schools get that churches do not. So just a thought to do it that way.
We wanted to introduce this concept to you because this is a very flexible tool. You can create a single member LLC, and as you see on your slide there, the church is the sole member, which means that the church essentially owns and controls it for tax purposes. But the church assets, generally speaking, are not exposed to the risks of the operation conducted by the LLC. So it's a natural, for example, to set one up if you're going to conduct your missions activities. Instead of conducting them in the name of the church, had Central Christian conducted their mission activities in the name of a wholly owned LLC, the entity that lost the suit would have been the LLC instead of the church, so only the assets owned by the LLC would have been exposed, not the entire asset base of the church. The working poor tax credit is a really exciting idea, and Scott Wakefield of our office will be working with Monica. We're hoping to have some special pricing. We think this will be under $2,000 for the package of setting this thing up, of setting up the LLC, getting it qualified with the state, and essentially putting you in a position to generate what amounts to free money from the state so that your congregants can designate money to go to the LLC instead of going to pay their Arizona state tax bill. You end up with an increased benevolence fund that must be used 51% for the working poor. So those are two very good examples of how this single member LLC concept can work. The other benefit of this structure is that you do not have to qualify this organization separately as a charity. So it does not have to go get a determination letter and file a Form 1023 and all of that. Also, it does not have to file a separate tax return. It is disregarded for tax purposes. It also does not have to file annual returns with the Arizona Corporation Commission. It also does not have to have a separate board of directors. It's like a fire and forget missile. So I mean, it's really a very economical, useful tool in our church planning. So it's efficient, low overhead, no separate annual filings, and it protects the church assets. So I mean, there are some footnotes in how to do it, and you do have to follow the doctrine of corporate formalities, and really that's a topic for another day. So if you're interested in doing this, we'd be glad to chat with you about it.